Hi there, Serial Trader here. Let's check in with the major US markets. So if you've been following along recently, you shouldn't be surprised by the downside action that we've experienced certainly today and even the day before, which is kind of a flat day, but it's set up for today. So if you've been trading with a bearish bias, as I have been, this has certainly been good for you. But I'll emphasize that there's still nothing to actually confirm or invalidate the 3 wave counts I've had on the go. So this is the one that I've been leaning on most heavily, and it's the bearish wave count, and that's where we're currently going down in a third of a third wave. And if that's the case, then it'll just probably keep falling down here fairly strongly. But that's not necessarily what's actually going to happen. This is still in play, the triangle, possibly the E wave that we've been coming down in, and then triangle thrust up to new highs. And this is still in play as well, although it's my least favorite count, if you will, just because the subdivisions in this supposed wave 1 up really don't divide well into an impulse wave, or a leading diagonal for that matter. It's not working well for that. So this is the least probable, but still possible, I suppose. So really it's down to these two for being high probability or accurate as far as counting the waves go. Anyway, this is still the favored one for now, but I'll emphasize some key levels on the other chart there. Let's go with thinkorswim. So here's the candlestick chart of SPX. So yesterday we had kind of a doji day, but I'll emphasize still a close below the T-line, and that actually reinforced the previous close below the T-line, okay, which was from Friday. And today we opened higher than yesterday's close, or open for that matter. And then we put in a bearish engulfing, closing well below the T-line and well below the 3T line, and now the 3T line has crossed below the T-line. So quite bearish here from that regard. And that's really a candlestick sell signal. When you have a bearish engulfing signal and a close below the T-line, that's just a standard candlestick sell signal, implying that the next 3 to 5 price bars will be in the same direction, and in this case that would imply downwards. So if that gets confirmed tomorrow by further bearish action, then you can almost rest assured we're going down to test or break these lows. And that will be significant, because if we go down to break the low, okay, the early April low of 25.53.80 on SPX, that will invalidate the bullish wave count that I was showing you before, and it'll basically put that bearish wave count right to the top of the heap, and I would be quite confident that at that point you're going to go down and take out those February lows and make lower lows, probably significantly lower. But again, it hasn't happened until it happens. Now, what I have here is a 618 retracement of this leg up off the early April lows, and we basically just nicked that today. Okay, so that 618 retracement comes in at 26.16.33, and we went as low as 26.17.32. So essentially didn't quite touch it, within a hair. And now some rejection off of it from the lows of the day. So here's what I'm gonna propose. So if you are long or have just gotten long on this, your stop is 26.17.32. Okay, if that gets taken out, we're almost assuredly going a lot lower here. Okay, now if you're a bear and you want to maintain your bearish bias, your stop is this candlestick. Okay, 27.17.49. If that gets taken out, then likely, especially if this holds first, then we're likely more along the bullish scenario that's been laid out. So we're right in between right now. So let me explain what I've done. So as you know, I had a bearish bias trade there, and I stuck with it yesterday, and I stuck with it today for most of the day. But then let me just go into a 10-minute price chart. Well, first, I'll just show that we've rejected off that Fibonacci level, which got my attention. And that's illustrated by that lower shadow on the candlestick. But let me go to a 10-minute intraday price chart of SPX. And I'll show you, okay, so even the T line on the 10-minute works quite well. So we were below the T line all day long, dropping, right? And then near the end of the day, we got up above the T line, came down and essentially tested it, and then came back up. And now the 3T line is above the T line, and we've closed above the T line, and that was right near the end of the day. So it might just be a, rather weak oversold bounce, but it got my attention. That may have been a significant pivot that the market was rejecting those lower prices off of. So I'll zoom back out to the daily here. So because that got my attention, I made an adjustment to the position. I essentially closed all my contracts other than one. So I got rid of all the puts and all the different small spreads I had built in there. And obviously took a significant amount of profit in doing so, as these last 2 days have been quite profitable for that position. And all I've left in place is 100 long calls, May 18th expiration at the 275 strike. And the reason I did that instead of just completely closing out, because it was basically my intention to just go flat and close out and wait for another setup. Basically wait for the market to confirm the bearish scenario or the bullish scenario on that overall daily chart. But since these calls have lost so much value, and obviously it's all relative, obviously the puts in the position did so well that the losses are minuscule in comparison on these calls. But nonetheless, these calls are very low in value now. So there's 100 calls. They're trading a little over 30 cents per share per contract. So it was only around 3,000 give or take of value, and for 100 calls. And the thing is, if this thing does turn bullish and bounces right back, and the market starts trending up, near the end of the month and early next month, these calls have a lot of upside. I mean, if we go to 280 on SPY, for instance, or on 2800 on SPX, these things would be sitting around 50 grand profit. Or even just to get back to break even, at least at expiration, just going back up to 276 on SPY, or even right now before expiration, just getting back up to 268, they break even. So I felt the risk of leaving them open and possibly losing the whole 3,000, which is quite a small amount, that was a risk I'm willing to take for the potential reward of this bouncing back. Even if it's just a temporary bounce back, I'd rather sell them at a more attractive price than what they're currently trading at, but we'll see. So that's what I did with the position. So I wouldn't say I'm flat, but I have only $3,000 of total risk now, which is minuscule compared to what it was. And now I'm just waiting. So tomorrow is going to be a significant day. If today's lows hold, and we actually have positive trading tomorrow, I'm going to start leaning a little more heavily towards actually having a pivot here at that 618, and possibly the bullish wave count being in play. But again, nothing really starts getting confirmed until you take out that high from that doji start that we put in last week. So interesting juncture in the market. I'm just going to wait and see what happens before doing any other big positions. It's been a very profitable, I'll say, week and a bit here playing this. Certainly have nothing to complain about there. And I'll just say that 200-day moving average is kind of looming there as well, but we didn't actually touch it. And we're not oversold on this daily oscillator, but it doesn't mean we have to get oversold to have a pivot. What else? All right. Let's go with the Dow Jones. Dow Jones Industrial Average. So similar to SPX, we had a bullish engulfing today after a doji yesterday, and a close below the T line. Very similar setup to SPX. NASDAQ composite. So today, not actually a bullish a bearish engulfing, and I think I might have said bullish engulfing on the Dow. It's bearish engulfing. Not actually a bearish engulfing today. So it's not technically a candlestick sell signal, but negative trading today nonetheless, and a close well below the T line. So NASDAQ in a similar position to the other indices. The VIX. VIX, okay. So VIX is trending up, and actually the VIX closed above the T line. So just telling you, VIX is starting to get some life back into it, coming off that oversold area. And obviously if the market really breaks down, you're going to see a big spike in VIX. Other than that, not a whole lot to say about it. Okay, and I think I did mention in the last video a couple individual names. Apple. Let's check in with Apple. So I mentioned it was likely that we would break below that 200-day moving average that we were just kind of sitting on due to these fairly strong sell signals, the island reversal, and then the gap down to follow up. And we've done that. So negative trading Monday, closed below the 200-day moving average, and then even more negative trading today, and obviously closed well below the 200. So it's certainly possible that we'll go down and test the February lows there. Obviously Apple, I mean, you'd have to see a candlestick buy signal and a close above the T line to start entertaining any real upside to it. And that certainly looks far away at this point, but we'll see. Amazon. Okay. So I do recall mentioning Amazon had a bearish engulfing candlestick right here. That was on Friday of last week. And then Monday, negative trading. Now today, negative trading and a close below the T line. So certainly good follow through from the bearish engulfing candlestick. And again, whenever you have an engulfing candlestick, once confirmed, it implies the next 3 to 5 candlesticks of that time period will be in that direction. So Amazon following through quite nicely on that sell signal. And I would mention increasing volume today as well on the sell-off. So I just decided to highlight those two since they basically behaved as expected from the last video. And good time to be patient here. Or if you're already in a position, you know where the significant levels are. I do plan on getting quite bearish position-wise, going quite aggressive if we break this low, the early April low. And I do plan on, well, I guess I technically have a bullish position right now, but it's quite a low-risk one dollar-wise. But I do plan on getting quite aggressively bullish, at least starting if we take out that doji star high, okay? So that's what I'm watching right now. Pretty small and just waiting to see what happens. There's a lot of other individual stocks that are hit badly today, obviously, and I'm not going to go over all of them, but just thought I'd bring that to your attention. Hopefully you're having good luck with your trading. Serial Trader signing off.